Hi, it's Richard Hemming here under the Radar Report. It's great to be back. I'm here with Peter Chilton and we're talking contractors. That's right, all things contracting where we've actually had some great returns in the past, making fivefold, but investing is all about the future. So I'm here to talk with Peter about the future. Hello, Peter.
Hi, Richard. Thanks for inviting me.
Well, contractors are basically companies that rely on short-term contracts to make money. So there's a lot more uncertainty. But what, for you, Peter, makes a quality contractor?
There's a whole range of things, but it includes the track record of a company. You want to see that.
Yep.
It includes the sort of business they're in. Is it a good business they're contracting to?
Yep.
Is it something reliable? What is the nature of the earnings? Is it a lump sum type of work, which is more risky, or has it got some sort of annuity or recurring nature? So those sort of things we look at. Has the company got some sort of niche which is really good at, which is a winning formula for the business, or is it just a rag bag of just individual contracts which none of them really make any sense?
How important is cyclicality in the contracting world, like in terms of investing in it especially?
It's pretty important because exuberance can set in when things are going really well, and most of the business of the contractors has some cyclicality. Mostly the business of the customers has got some cyclicality. So if you've got a company that's doing really well, winning lots of new contracts, you've got to assume at some point they'll start winning less contracts. And for some businesses, the whole new contracts just dry up completely.
And they're famous.
Downturn.
Famous for their blow-ups too, aren't they?
Yeah.
Some of the companies that we've looked at and we've been successful in have been ones in transition. In particular, I would say Southern Cross Electric has transitioned from being just mining services to broadening it
Broadened out into commercial work, infrastructure. They made a number of astute acquisitions. They're now even doing electrical work for retail stores like Woolworths and Coles as a means of branching out and having a more reliable income stream. So, a lot of these companies do make positive transitions, which goes on to leading to a more successful, sustainable business.
Would you say that there's too much optimism in many contractor prices, or not enough optimism so there's value? How would you gauge the value in the sector?
You often get a bit of optimism creeping into the sector. So I guess it's always you always have to look at what the share price has been doing and think, well, is this becoming overbought? And is it time to take some profits? Fundamental analysis is always important.
Yep.
Looking at the order book, backlog, work in progress, just where's that business going? Because it needs to be sustainable.
Would you prefer bigger companies to smaller companies? Because does size matter in contracting?
You can get too big. You can get too big that it's almost impossible to keep winning contracts. Smaller contractors, starting off a lower base, they may also be a really good investment proposition if you buy at the right time, especially if they've got good management, maybe who've got experience from working for bigger contractors, and they start up their new company with some sort of niche. Companies you ought to watch.
So let's go through a couple of contractors. I guess Lendlease is a contractor in some senses and a property developer in other senses. So let's start off with that. They're particularly newsworthy because they had up to 100 million of cost cutting, basically jobs that they're getting rid of offshore. Does that even touch the sides?
It would always be evident for a company of its scale and promise and what it was planning to do, that their margins were too low and the rates of return on invested capital were too low. It was always obvious that something had to give, something had to change, and they changed the chief executive as a start.
You're positive on Lendlease.
No.
Why are you positive on Lendlease?
Just because they're doing something which internationally, urban renewal and things like that. It seems to me a good business model in the area of demand.
Okay.
And I think generally speaking their product is well received.
And it's a turnaround.
But some of it is just the executions hasn't been good enough.
Let's move on to a smaller company that's been successful. I think we've made fivefold on GR Engineering, which is a traditional contractor. GR Engineering.
The thing about geoengineering is that it's got a niche in building mineral processing plants, and it's been very successful at building those. It's built them, to a budget. A lot of it's been lump sum, which is quite risky, but they've done it. They've successfully done that to budget, on schedule, and they've got this consulting arm, which consults to companies that may have a project in the future, and they suggest an engineering solution, and they're pretty good at converting that into a real contract. It doesn't always go their way.
Hearing that, it seems like GR Engineering has a superior business model. Why wouldn't you buy that stock at the moment?
The only reason you'd be a bit cautious at the moment is they've been doing so well that a lot of the major resources projects have been completed. And so it's a big ask to get that all replaced.
So would you be taking profits on that?
I think you'd probably take a few profits, but watch very carefully, because they've been winning some new contracts in the last few months.
Whereas another one that's in that sector, Southern Cross Electrical, which you're more positive on, would you be buying Southern Cross Electrical, and why?
Well, Southern Cross Electrical, they've had a similar sort of issue in the sense that the resources from these big contracts have been running down, but then I suppose they're now doing work on the East Coast, a lot of infrastructure work, doing quite a lot of work for Western Sydney Airport.
Right.
They just won some new contracts there. So I guess it's a question of, because they're diversified, that reduces the risk in the business. Plus the fact that with the latest acquisition which they made, gets them into the sort of retailers where they're doing just general electrical maintenance, which provides a higher level of annuity, recurring type income, which further reduces the risk.
Well, there's a lot to think about there, and some couple of good tips. So thank you for joining us again. Okay,
Thank you.
Great to be back. Look forward to talking to you again soon.